been particularly busy in the gold market. Hopefully what we can do today is cut through a lot of that noise. So we'll kick off with a very brief introduction to HANetf and who we are, and then we'll spend a little bit of time looking at the current macroeconomic environment and why multiple factors are pointing to a strong 2024 for gold. At that point, I'm going to hand over to my colleague Andre to talk through how you might look at accessing the gold market and provide an introduction to our product, the Royal Mint Responsibly Sourced Physical Gold ETC, a product we're very proud to say is the first of its kind to be listed on the Warsaw Stock Exchange. So let's get into it. As mentioned, my name's Ben Slade and I'm responsible for European retail distribution here at HANetf. And I'm pleased to be joined by Andre Voyner, who's our head of distribution for Germany, Central and Eastern Europe. So HANetf, we're Europe's first white label ETF and ETC issuer, meaning that we work with specialist partners such as the Royal Mint to bring exciting and innovative products to market. We were founded in 2017 by ETF pioneers Hector McNeil and Nick Biankowski, who since then have built a team with over 350 years of combined ETF experience. As a white label platform, it's our job to provide operational, trading and distribution expertise to help partners launch and distribute new products to the rapidly growing European ETF market. So a couple of milestones just to give you an idea of our journey so far. We've launched over 40 products since our first listings in 2018, including the world's first centrally cleared Bitcoin ETP, the first physical carbon allowances product, and of course RMAU, a 100% physically backed gold ETC that we're going to focus on today, and that already holds over 800 million in assets. So let's get into it. Why gold, and crucially, why now? So if you follow the markets closely, you'll know that 2023 has been an interesting year for gold. Year to date, gold is up around 12%, but the bulk of that performance has really come in the last couple of months. So earlier this month, gold prices traded at their highest ever recorded level when they hit $2,111 per ounce on the 4th of December, shattering their previous high of $2,075 set in August 2020. And as you can hopefully see from the graph there on screen, it's been a pretty staggering end to the year. You can see at the beginning of October, gold was priced at just over $1,800 per ounce, about the same level it was this time last year. So to come from hitting this level to hitting record highs in just over a month is a pretty remarkable turnaround. And whilst of course no forecast can or should be taken as a cast iron guarantee, there are multiple analysts who now think that gold can hit 2,100 again in 2024 and could even touch the 2,200 mark per ounce by the end of the year. But why is that, and what is there that's actually driving this optimism as we head into 2024? Let's break this down as simply as possible and really go back to some basics. Firstly, interest rates. Increasingly, the sentiment seems to be that interest rates, particularly in the US, have peaked. Now, when we were preparing for this webinar, whilst the market was already starting to price in rate cuts, there hadn't actually been a really firm indication from the Federal Reserve that this is what they were going to do. But overnight, there was some pretty significant news out of the US because Federal Reserve Chairman Jay Powell said that the Fed rate, and I'm quoting here, was likely at or near its peak for this tightening cycle. So a pretty firm indication that the hiking cycle's finished, and we can probably look ahead to rate cuts as early as Q1 next year. But how does the lower rate environment actually benefit gold? And as I said, let's really go back to basics here. So when interest rates are high, investors are attracted by the high yields offered by bonds and other fixed income securities. In contrast, gold, which doesn't offer any interest or dividends, sees a drop in demand and therefore downward pressure on the price. On the other hand, when rates are decreasing, as we now expect them to do next year, bonds become less attractive as yields decrease, and investors instead look to gold as a defensive exposure to bolster their portfolios. And on top of that as well, rate cuts generally lead to a weaker US dollar. And because gold is denominated in US dollars, a weakness in the currency yet again pushes up demand for gold and yet again pushes prices even higher. So hopefully you can see the next slide there. That's the basic macroeconomics covered. But what else is driving gold higher? Now, probably the most common investment argument for gold is that it serves as a safe haven asset during volatile times. And I think it's certainly fair to say we're living through those at the moment. Gold's seen as a safe haven because it's a physical store of value. It can't be printed or manipulated in the same way as cash, and it's less likely to lose its value during times of market turbulence. Whether it's the ongoing war in Ukraine or the escalation of conflict in the Middle East, geopolitical events such as these tend to drive inflows into gold and gold derivative products and therefore push the price even higher. And we saw this play out very clearly in October. So if you take a look at the graph on the screen here, you can see that very clear uptick in price return. And whilst geopolitical uncertainty, which is green on the graph there, was certainly a major factor, what's also interesting to note is just how many things there are in the market at the moment that are putting the upward pressure on this price of gold, and will probably continue to do so into 2024. So demand for gold is rising, and it looks like it continued to do so for some time. But it's not just individuals and financial institutions buying gold, but crucially, perhaps most importantly, also central banks around the world. Now, central banks have been big buyers of gold since the 2008 financial crisis, but we've seen a huge acceleration in the rate of their buying over the last year or two. The graph you can see is a little bit incomplete because obviously we're not at the end of Q4 2023 yet, but all activity and all signs are pointing to a record year for central bank gold buying. And worth noting as well that the People's Bank of China has been one of the largest gold purchasers in the world for the last year or so. And perhaps what's even more important is that in the first 3 quarters of the year, central banks purchased around 800 tons of gold, a record amount and up around 14% compared to the same period in 2022. And crucially, according to the Royal Mint, 24% of all central banks intend to increase their gold reserves over the next 12 months. So if this demand isn't going anywhere, it could only serve to keep driving up gold prices. So I want to take a moment there and pivot slightly. So now that we've looked at a very high level the outlook for gold and what's actually driving the inflows and price action over the last few months, it makes sense to turn to how investors might look at actually accessing gold and taking advantage of what's going on. Now, physical gold can be a notoriously tough asset for retail investors to buy and to hold. So, for example, even if you're bullish on gold and think it's going to have a very strong 2024 as we do, for most of us, it can be very difficult and not to mention very expensive to actually go out, buy physical gold and store it safely. So now I want to hand over to my colleague, Andre Voyner, to introduce you to the Royal Mint responsibly sourced physical gold ETC, which, as I mentioned, is the first product of its kind to be listed on the Warsaw Stock Exchange. So, Andre, please take it away.
Great. Thank you very much, Ben, for the outlook. So as Ben said, I think it's a very exciting time for gold. One point to mention also that we have been discussing with our professional investors over the recent weeks and months is relating to what Ben said, the outlook for the rate environment. Where are rates going? And the markets assume that rates are probably at their peak and going to come down. And the last 2 rate hike cycles, when we looked at it, gold did perform well both on the way up while rates were going up and on the way down. So once you came from the peak and you went down to a new low in the rate hiking cycle, we split the performance in 2, and on both sides of these peaks and troughs, you had positive performance in gold. So some people ask us, do you think gold will still do well? As Ben said, we had a couple of spikes now, the price spiked. We think based on that data at least, and it is a small sample, but the last 2 rate hiking cycles indicate that gold can still do well in a downward rate cycle as well. So I think for the kind of short to midterm, the short to midterm outlook based on that statistic is quite interesting. So as Ben said, how to invest in gold. So the question is, if you say, look, I agree with your view, I think gold is good. I like gold. I would like to have gold in my portfolio for whatever reason. How do you get exposure to gold? How do you invest in it? And there's different ways how you can access gold. Normally, you can do it physically. That's the very classic way. You buy a gold coin, you buy gold bars. If you want to do it in financial markets, some of the professional investors do it via futures investing, and private investors can use contract for difference, CFDs, or these kind of things. What we offer, our proposal is to say an ETC is an exchange trade commodity, gives you the best of both worlds in a way. Namely, you get gold, you get the physical aspect of gold. So it's like holding a gold bar or gold coin. So you have that kind of safe haven characteristic, the safety of gold, which many investors value. And they say, if the world is going the wrong way, if things go badly, and you want to have gold as a backup, as a safety net. That's what you get in ETC. You have it physically, but at the same time, you do get the liquidity of a financial market product. Because anyone, if any of our listeners have ever invested in physical gold, you will know that buying a gold coin or bar is actually not very efficient, because you do have to pay a premium, which is anywhere between 3 and 5, 6%, to get that that coin or that bar printed. There's work behind it. There's the company who does it charges you for that. So you immediately lose a certain, a couple of percentage points from the actual price of gold, just for the privilege of holding it. And in addition to that, you have to take care of your gold. You have to store it at home somewhere. And look, I have myself, me and my wife, we got for our wedding some physical gold coins and bars, and we have them here. But there's always a risk that you store it with you. The ETC, what it does is it takes away that risk. The risk is externalized to a custodian, to a professional counterparty who stores the gold in your name, in the name of the investors, and custodies it there with them. And the main question we get when we explain this or pushback, people say, well, is it really my gold then? Can I get the gold? Because if I invest in ETC on a stock exchange, on Warsaw Stock Exchange, I don't have the gold. It's not my gold. And we say, like, yes, it is your gold, and you can get your gold physically delivered. So that's one fairly unique. We're not the only ones, but not everyone offers that. We're one of the companies who do offer physical redemption. So physical redemption means that when you want to sell your units, let's say you invest 1,000 zloty with us in our ETC, and you say, you know what, I would like to get the gold, the actual gold. I don't want to sell it for cash. You can fill in a form, and then we send that gold to you via secured transport to Poland, and you can get that actual gold in different forms. And I'll show you in a second how that looks like. And I'll also be very open about it. If you do that, you pay the premium for printing those gold bars and coins. Thanks, Ben. Exactly, that's the slide. These are the different shapes and forms how you can get our ETC delivered. If you wanted to take physical delivery, you can get it in Britannias, in sovereign, different types of coins that our partner prints, or these gold bars. Again, you also need a certain minimum investment. The minimum size that we do at the moment is 1 ounce gold bar. So 1 ounce at the moment is valued at roughly $2,000. So you need to invest a minimum of $2,000. That's not cheap, but that's it's not crazy expensive. So you can get for even as a private investor, it is a reasonable proposition to do that. There are some, you need to go through some KYC. KYC stands for know your client. So we need to run some checks in background, but that's all fairly standardized. There's some small fee also for delivery. But I think the bottom line here is that if you want to get your gold, you can get it. And it was important to us because sometimes people are afraid that when you invest in a financial instrument, you do not actually own the gold. You do own the gold. It is yours, your name as an investor, and you can get it. Now, going one step back, if you don't mind, Ben, can you please go one slide back? Or actually 2 slides. Sorry, one more. Just one more. Sorry, 3 slides. Just if you wonder, who's HANetf? Like, why should you invest with us? I'm pretty sure most of you will not have heard of us before. We've been on the Polish Stock Exchange now for 3 months, since September. We listed, or I think end of August. These 2 gentlemen are our CEOs and founders of the company, Hector and Nick. That's actually where the name Han comes from, if you wonder. Han stands for Hector and Nick. So our two bosses made themselves like immortal in the name of the company. The reason I'm mentioning them is because they actually invented the structure, the ETC structure, the exchange traded commodity structure, 20 years ago in 2003. They launched the very first gold ETC in Australia at that time, and then later on in Europe. There's a product which still exists today. It's called Gold Bullion Securities. It's with a different company, and that product still is there. So they designed the first way or product to invest in physical gold via a financial product. And so we have, even though we are a young company and we're like 5 years in the market now, we have a lot of expertise in the gold market, in the gold sector. And the reason, when we founded the company, we wanted to bring a gold product to the market, but there were already a lot of gold products available. So the question was, what can we do that is different and maybe better than others do already? So for investors. So what happened at that time, because HANetf, we have like this white label approach, meaning that we work, all the products you find in our product offering are not developed or issued by ourselves, but always with a partner. So somebody comes to us and says, I'm good at doing this or that. I would like you, Han, to please launch this product for me in my name, and I give you the expertise and the strategy behind it. So what happened here is 3-4 years ago, a company called the Royal Mint, which is the British Mint. A mint is the guys who print coins and bars for payment. So in the UK, when we pay with coins and things like that, the Royal Mint prints those coins. They're the official, they're part of the Treasury of the Finance Ministry of UK, and they're allowed to print this official tender coin. And they also have a big gold and precious metals business. So they came to us and said, hey, we don't have a financial market product yet. Could you do an ETC for us, an exchange trade commodity? And we said, yes, we can. And that's when we actually realized the first kind of benefit that this product can bring to you as the investor. Namely, if you invest in gold, why do you invest in gold? One of the main reasons why people invest in gold is because of safe haven. So you want to protect yourself from risk, from financial crisis, from war, from recession, all kind of things. So we said, if you invest in gold because you are afraid of risks, and particularly in 2008, that financial crisis was one of the biggest risks that happened in 50, 60, 70 years. Does it make sense to have your gold in a vault, in a safe with a bank? Because that's what all the other ETCs, if you go to iShares, if you go to Invesco, Amundi, all the big names in the market, and I don't want to be kind of mean to them. Ben used to work for iShares, so I'm not slacking off other. But what they do, the normal structure of most ETCs, 75% of ETCs worldwide, they have the gold is kept in a safe with JP Morgan or HSBC. They are the biggest custodians, the biggest safes for gold in the world. So does it make sense, if you want to protect yourself from a financial crisis, to put your gold with a bank exactly there where basically the worst thing happens in a crisis, like Lehman Brothers went bankrupt? I'm not saying that JP Morgan or HSBC will go bankrupt, but if something were to happen, you have to do all kind of paperwork and go through all kind of things to get your gold. So we said, like, you know what, if we can keep the gold with a different entity, which is outside the banking sector, like the Royal Mint, which is part of a government. The government is normally the safest kind of place you can do business with. We think there's an added value to having that. So that was the very first kind of reason why we launched the product. And I think until today, private investors who I speak to across Europe, even if you're not in the UK, people who know the company, the Royal Mint has been around for 1,000 years, 1,000+ years. It's the oldest company in the UK. I think it's the 8th or 9th oldest in Europe. So they have survived wars, they've survived epidemics, everything. It is a very safe place, and that safety net is one of the key benefits we want to offer to investors like yourself. So that was the starting point. If you go one slide further, Ben, I just want to kind of highlight here the four characteristics. If you invest in gold and you discuss, what should I be looking in? What should I be looking at in a good product? What is a good gold product? If you say, fine, I want to invest in ETCs and not in physical gold, and I understand the arguments, you should be looking roughly at these 4 points. You should make sure that your product is physically backed with gold bars. Most people do it. Most providers, iShares, us, Amundi, and so on, everyone does it. It is a common standard, but sometimes there are products without physical backing. They can be synthetic, the CFD trading, contract for difference. That's fine if you want to kind of for speculation purpose, and if you want less capital investment. I use CFD sometimes, but if you want to use gold as a kind of safe haven play, normally what we hear from investors, they say, I want that physical backing 100%. So make sure that the product you look at when you compare them, that they are physically backed. The second one is operational quality. Again, it is probably a standard by now. Most companies do know what to do, but still, have a look at who is the issuer. Are companies transparent? And for us, it's very important. We are you know, and I'm not saying that to brag, we are one of the most transparent companies when it comes to gold ETCs. And I'll show you in a second. If you want to know how much gold is in our product, how many bars, we have a list, an Excel list. You can see it on our webpage. You can click on it. We update it every time we have new transactions in the product. And you can see each and every bar in the product there. You can see the weight. Thanks, Ben. Yeah. That's a screenshot. So you can see the number of bars. You can see, you know, in column B, the bar number. It's a unique identifier. You can see the year it was printed. You can see the company who printed it. You can see the, you know, finesse. That allows you to uniquely identify each single bar. Now you might say, well, okay, that's nice, but that's your own information. How can I trust this information? If you go one further, Ben, we have a gold audit twice a year by an independent counterparty. These guys are called Alex Stewart. They go into the vault and they check. They look through the bars which we have there, and they say, yes, I confirm bar number 5 with this and that is actually there, and I confirm that, you know, these bars confirm to the information that HANetf put on that Excel spreadsheet. So there's a cross check there. And you can kind of make sure that what we are saying is not just us inventing stuff and saying wrong things, but it's actually there. So that is important, this operational quality aspect. If you can go back to slides, the overview. Physical redemption, I mentioned already. Not everyone offers it. Like, ask if this is important to you, and you say, I want the ability to get my gold. It's actually only the minority of products out there offer that. Many do not. Again, it's up to everyone to decide whether it's important or not, but we do it and did it. And I think we are currently one of the very few to offer these small coin and bar denominations. Sometimes you just find like large bars, 12 kilo bars, which costs roughly $700,000 at the current price. So they make it available for professional investors. For us, it was important to offer it also for private investors. Liquidity is an important aspect as well. Here, particularly for the Polish market, we thought, you know, we knew, we had feedback that Poland is a big market for gold. People like gold, want to invest. And I know that many Polish investors do have access to gold ETCs and products via brokers and you can trade via Germany or other exchanges. So many of you will have access already to foreign products. We wanted to make it local. We wanted to give you a Polish zloty listing. And the reason why that is important, there are two main reasons why we think offering liquidity on a local stock exchange is important, is because you don't lose on FX, because normally gold is quoted in dollars. So the dollar price in gold, the gold price is in dollars. And then if you go via foreign exchange in Europe normally, it means you go to your broker, you invest in Polish zloty. Polish zloty gets changed into euro, and then from euro they invest in the dollar tranche. You know, so you have two FX there. If you do it on the Polish stock exchange, you go straight in zloty, and you only have the zloty to dollar conversion there. So whatever broker, and it depends on your broker, whatever the broker charges for that FX conversion to euro, you save when you trade on your local exchange. So that can be meaningful sometimes. You know, you can look at, and I think Ben and I, we checked it, can be anywhere from 0.25% to even higher. It's, you know, I'm not saying it's gigantic, but it's not nothing. So if you can trade in local currency, we think it's worth having that zloty trading line. And secondly, if you trade on GPW, the Polish exchange in Warsaw, you pay no custody fee. It's a bit of a technical argument, but having it in Poland, stored with your broker there, saves you a little bit normally on that custody. Again, it depends from broker to broker. Some broker will charge you for foreign. If you trade in foreign securities and other markets, some will charge you, some will not charge you. You need to inquire with them. But for our product, like when you are in Poland, you're not getting charged. So these two benefits were important to us. That's why we came to Warsaw, to Poland, to list it here. And finally, the one marked in red here, the custody. I already mentioned it before, but so I'm not going to dwell on it much further. But it was really important that we have this unique custody, meaning the safe where the gold is stored is with an entity, with a company which is not part of the financial system, of the wider financial system. So I think that's a key, a unique benefit that we can offer with this solution product. Ben, if you don't mind, can you jump to the liquidity slide? Actually, I probably covered this already, but I'm just going to very briefly mention most of the information here is actually relevant more for the professional investor side. What we do in Poland, as I said, we work with Santander. Santander is our local market maker. They are, experienced, big brand name. We've had lots of discussion with them. We have daily interactions. We have, if you're wondering how can we guarantee liquidity, for your background, we have a capital markets team who monitors the prices of all our products, and daily we look at the Polish Stock Exchange. We look how is the product trading, is the price that is quoted there. And when I say price, I mean there's a bid-ask spread. For those of you who know how, when you trade on exchange, those bid-ask spreads is how much you pay basically to go in and out into such a product. We make sure we try to do our best to ensure that you get as good a price as possible for these products, to keep it narrow so that your costs for entering the product and going out is as efficient as possible. I think so far we've had good experiences for the first couple of months. We will try, we work constantly to improve on these. We had a very actually interesting and kind of successful start. We had over $1 million traded in Poland over the first 2 months in this product. So I think it was very nice to see that investors did accept that this is an interesting product. People took interest in it. They did trade it. So there is a market normally every day, and I watch it every day. There's some trading going on in the product, so there's liquidity. You can find, there's always a price. So that again, this local local trading aspect is we're the first ETC to find in Poland. That was quite important to us to be locally present. I think that covers most of the points that are important about the product. I think, Ben, if you go one slide further. Yeah, one before. One last aspect to mention. If any of you are thinking sustainability and ESG are important to you, what we did is very unique, and I know from other discussions with private investors, not everyone cares about that, but gold in principle is seen as because a commodity is dirty by definition, right? People say you have to dig it out of the ground. When you build a gold mine, any one of you who might have seen a gold mine somewhere, it's a really big kind of enterprise. You have to dig a huge hole into the rainforest or wherever you find those gold deposits. So it's important that you then over these 15, 20, 30, 40 years that this project goes on, that you kind of you have to replant the trees. There might be people living around there who get impacted by these gold mines. So these aspects have been a bit controversial in the past, and not everyone was happy with the way that commodities were extracted and used. So what we did is we said we would like to focus also on this sustainability, and there's two. If I had to keep it short, two key aspects. One, all our gold bars, 100%, are coming from a system which is called the LBMA responsibly sourced gold. LBMA is the biggest organization of gold producers and gold trading in the world. It's based in London. LBMA stands for London Bullion Market Association. They are basically like a interest group, a group of traders, banks, and different entities who trade physically in the gold market. There's billions of gold dollars traded every day. It's an extremely liquid market. They basically determine the price of gold every day. There are two fixing, one in the morning, one in the afternoon, where they fix the gold price. And this gold price is the benchmark for gold worldwide these days in dollars. So they, in 2012, said more and more investors tell us that they want to make sure that gold is extracted from mines in a responsible way. So they designed a framework to make what in a nutshell, what they're doing is they want to make sure that when you take gold off the ground and you have a mine somewhere, the people are treated fairly, right? The workers are not exploited. There's no child labor. There's fair payment. There's no the proceeds from digging out the gold and selling it is not used for bribery, terrorism financing, money laundering. These kind of things are taken into account with this sustainable sourcing standard. And we made sure that all our gold bars are coming from this standard. And this standard gets updated every couple of years. So we have the 2019 standard at the moment, which used to be the highest standard when we started the product. There's a newer standard now, 2021. We're trying to move to that step by step now. So we try to uphold the highest standard in terms of sustainability of our gold bars. And a second thing that we did last year was we started using recycled gold bars. So we worked with a strategic partner of ours, with a private bank, who said we want to be a green bank. We want to be, green credentials, but we like gold. We want to invest in gold. We have a big belief that gold is part of a portfolio. How can we combine this? And their research team said, for us, recycled gold is the right way forward. So we spoke to the Royal Mint, and the Royal Mint said, you know what, we can actually implement that, because every time when the Royal Mint prints a coin or a bar, there's a bit left over, right? When you print a coin, a little bit of gold falls off from the corner. A little bit of gold dust is left over when you write something on the coin, the date or a name or something. So that gold leftover is collected. Normally they would use it for something else there. So we are competing now internally in their organization for this gold, for the leftover. And we basically kind of almost buy it from them. We get it from them. We send it to a refiner, and the refiner makes gold bars for us from that. They certify 100% of this gold bar was made using old gold, like what is scrap is what they call it. And then we put it back in the ETC, we put it back in the vault, and we exchange it for the other gold bars, which are from the primary market. So this is a unique step. Look, I don't want to say it's, we're reinventing the wheel here, but we are trying to contribute a bit more towards this kind of the idea of a circular economy, trying to use gold, reuse gold where it's available instead of mining it and doing new. And Ben, if you don't mind, if you go to the next slide. The key benefits of this is, on the one hand, it has a much lower CO2 footprint, 95%, 94% or more, or even higher, in terms of the reduction that you can achieve in CO2 footprint. And then the right-hand statistic, as it shows, just to get 1 kilo of gold, you have to dig out 1.2 million tons kilo of earth and stones, and just go there. So that is a huge amount, right? That's why I said, like, it's a huge enterprises, these mines. So if you can avoid that, or if you can help to lower this footprint, we thought it's worthwhile doing it. And there were some costs involved. So we had to find, but we were able to find a very cost-efficient solution, luckily, with the Royal Mint. So we're doing that at the moment. The recycled gold ratio is around 45% in the fund. So a total of 45% of all gold bars in our fund are from recycled sources. As I said, if you don't care about that, that's fine. It is the same. It's gold is gold, right? There's no difference. Like, the price is the same. There's no difference in price between recycled and normal gold at the moment. Maybe one day there might be a different market for that, but right now it's valued at the same price. So you have no kind of negative impact, no positive impact price wise. You just either you're in favor of that, or if you don't care about it, then that is fine. So now I talked quite a lot. That concludes my part. I hope it gave you a bit of an overview of what we do, how we do it, and why. Maybe if you go one before that, Ben, that's just a short summary. Basically, if you, again, after all my monologue here, why is our, what are the benefits we want to give to investors with this gold ETC? It's the custody with the Royal Mint. It's a sovereign entity. We think they are a bit safer than the average bank. And then you have the ESG benefit that I just mentioned. And on the right-hand side, you can find the ISIN. If you want to look up the product and have a look at any data, the cost is 0.25% per year at the management fee. There are some companies who are a bit cheaper. There are some companies who are more expensive. We are in the middle. This allows us with this middle pricing to do the ESG part, which I just mentioned, because there are some costs involved. We feel it's hopefully a very reasonable pricing given the benefits we try to offer. If you have questions, want to know more about any of these aspects we mentioned, you can either go to our website. You find a lot of information there. We publish a lot of documents, a bit too many maybe, on the website. Otherwise, just reach out to Ben or myself or to mBank, your representative there, and they can help you. So thanks very much for your time. If you have
Andre, just very quickly, we do have a couple of questions that have come through whilst you've been speaking, actually about the physical cost or the physical delivery. There's a question here from Lucas. I'm looking at yours here, where you've asked, what about the PLN USD ratio? If stocks are on GPW, why physical cost in US dollars? I think the answer there is that the Warsaw listing is separate from the associated cost for physical delivery. So that's set by the Royal Mint, and that'd be the same whichever listing you trade on. So that those are two sort of distinct things there. And we also have a question, Andre, here from Casper, who said, what's the cost essentially to get a physical delivery of the purchased gold? And I think I'll go back to this slide here. There's no sort of one answer to this, because it does depend on obviously the size of your holding and the amount of gold that you are redeeming. I believe, Andre, we normally express it in basis points, but we would probably have to take a look at that one and come back with some feedback there.
Yeah, I think so. Again, I don't want to pretend that this is for free. Like if you ask me, my personal opinion, if you had a choice between selling on exchange or getting your physical delivery, personally, I would always sell on exchange because it's the most efficient way to do it. If what you want to get is price appreciation, price return, then that's the bid-ask spread, basically the cost of getting in and out, is somewhere in the region of 0.1%, let's say, roughly. Sometimes a bit lower, sometimes a bit higher. So that is very efficient. If you go in the physical market and you get the delivery home to you, I think there's an administration fee of, let me say something wrong, up to 600 euro, so it's kind of a bit negotiable. It's something that depends. You have to hand in a form, a PDF, which you fill in. We send that to our administrator, so they then say, well, we have administrative costs, and then after you pay that admin fee, there is the conversion fee, which I mentioned. And again, it depends on what you choose to do. If you choose coins, what about 10 coins? Those coins might cost somewhere like 4 or 5% conversion. Again, and it's not us making any kind of profit here. It's what you would pay if you were to buy those coins from the Royal Mint. The Royal Mint sells these coins. You can go on a website and you can buy them actually without doing anything with our ETC. You can go there and buy them directly. The same production cost they have for that, you would pay for us, because they have to pay for their own production fee. The bars, the small bars, might be a bit less. So as far to the best of my memory, it's somewhere between 3 and 7%, depending on what you choose to as a product. So you have that physical premium plus the admin fee, which is the cost you have, and then included in that admin and then production fee is the transport. It's an insured transport within the EU, which Poland is part of. So again, don't hold me accountable to it. That's the best of my recollection, that we do send it insured by that, and there's no other fee. But if anyone is interested to actually do that and look at it, we have a thorough process, and I'll look up the document, and we'll be happy to kind of engage with you directly and give you the full detail if any of you would like to look at that in more depth. But that's a rough outline.
Absolutely. And Andre, I think probably a nice question to finish on here. Lucas has asked, what are the guarantees? How do we secure this investment? I think, Andre, you've touched on this pretty nicely throughout the presentation here. As you mentioned, Royal Mint. So this is the only gold ETC available that is the gold is custodied with the Royal Mint, which is, Andre explained, is the oldest company in the United Kingdom, a secure vault here in Wales. I say here in Wales, I'm in London, over here in the United Kingdom, and all the usual protections that come with financial products as well. So if the worst were to happen, HANetf goes into administration next week, we don't have any plans to. Your assets are safeguarded and entirely separate.
Exactly. So what is important, and these are like they're fine technical details, but they're important. There's something called allocated gold and unallocated gold. So what we do is, when the Royal Mint has this safe, this vault, right? In they are based in Wales. So in Wales, near Cardiff, they have this big, production site where they have a vault where the gold bars for our ETC are there. So every time when investors buy, let's say on the exchange, and then when it goes up to certain amounts, a million, let's say you get $1 million worth in trading over time, over 1-2 days, then we get what we call a creation. Creation means we give we issue new shares, and then we say, okay, this 1 million gets now in the vault actually. So we get the gold from London. The process is, we then trade here with HSBC in London. The gold goes in our name, allocated. Allocated means it's allocated legally to us as the issuer, and not us. The issuer is basically you, the investors. So it's the investors' money who owns that gold. And even if in the first step in the HSBC vault, HSBC is doing gold business every day. They're one of the biggest gold traders in the market. So they have a big vault with like millions and probably billions of gold sitting there. So they move basically one gold bar from right to left, and legally it becomes allocated in our name, meaning that if HSBC were to go bankrupt the next day, in the proceedings of the bankruptcy and insolvency proceedings, we have a right to get that gold bar back. Nobody else can. Even if they don't have money to pay back the other debtors and people who owe money to HSBC, that gold bar is protected legally. It's in your name. That is very important, because if it was unallocated gold, unallocated means, just like with Lehman, it goes into the bankruptcy insolvency mass. So then you can't claim it. You just get like 30% or whatever is left over at the end of the day. And that is the key about ETCs. They make the gold be entitled to the investor. And we also make sure that, when, again, a technicality, but when we get an order, when you trade with your on mBank, the exchange, mBank goes to one of our what we call market makers, the professional companies who trade in the gold market. They come to us and say, okay, I have 100 clients at mBank who all want to trade this. Everyone buys something. I accumulated 1 million in gold demand from them. Please give me 1 million in shares, ETC shares, for these guys. So I have to give them the certificate that they own the gold. And we say, okay, we will do that, but I don't want your money in a million. I want you to give me gold bars worth $1 million. Only once they deliver this 1 million, the market maker, this professional company, they send the gold bars to us. We have an administrator, and the administrator says, yes, I confirm the gold bars have been sent from this guy to us. HANetf, you have 1 million more gold bars in your vault in the name of these investors of yours. Then we say, okay, got it. And then we issue the new certificates to go into your account. If they fail to deliver that, we will not issue the certificates. And this protects you, that you will never have a certificate like a share ownership in the ETC without actually having the gold behind it. And that's very important. That's the only way you can protect yourself, that you really have gold there and the gold is in your name. So one gentleman here said in the text, the question was, in case the world falls apart. If the world falls apart and everything goes to shits, that gold is in your name and for you. And that is the important part. Of course, it's a different question, how do you get to the gold? If the world falls apart, like I said, maybe you want to get your gold physically to you. That's why we did it. So you're happy to pay 5% premium because next week the world falls apart. Okay, then get your gold. That's fine. That's why we have all these options, and the possibility for you to decide whatever you think is right for you.
Fantastic. Thanks very much, Andre. And I think, if there are no more questions, as you can see, our contact details are up there on the screen. I will pick up on one last comment in the comment section there, where someone said that the National Bank of Liberia guarantees the safety of this product. I just, if anyone's read that, that is incorrect. As Andre said, this is a product in partnership with the Royal Mint here in the United Kingdom. So thank you for your input, but unfortunately, I'm going to have to pick you up on that one. Well, guys, thank you very much, everyone, for joining us. Really appreciate it. And yeah, as you can see, our contact details there. Please don't hesitate to get in touch with Andre or myself, or email us at info@hanetf.com, and we will be more than willing to answer your questions. Thanks once again to Mbank and the team for having us, and enjoy the rest of your evening.
Yeah, and if you ever would like to see us face to face and ask us some tough questions, we will try to participate next year in there's an event from the Polish Stock Exchange, GPW, I think in March or April. So we come to Poland sometimes. I have been to Poland 2 times this year in Warsaw. We try to be there in person to answer questions. So please, come to us, or as Ben said, send an email is the easiest way. But if you ever want to see us in person, Ben or me, and see that we really exist, we hope to see you next year.
Fantastic. Thanks, Andre. Thanks all. Enjoy your evening. Bye-bye.